Hi everybody, Adam Stern, CEO of Strata SFR here for our, is it August already? August, crazy. This summer just seemed to have flown by. This is our August monthly Touchbase, and this gives me an opportunity to sound off on what I'm seeing in Strata's business and the single family rental space and the real estate market overall. So I'll start by saying this. Some big things are gonna happen in the next few months, including the election. And whether you're on one side or the other, I think there is an anticipation as to whether things will get better or worse after the election. And I think a lot of people are on both sides. So that's a big event. And there's also the Fed came out yesterday letting everyone know they're not going to cut rates in the short term, but they're planning on making rate cuts in the near term, like Q4 this year. So I feel like there's a lot of optimism about these changes that are happening in our country and in the market. And whenever that happens, and I've seen it a bunch, people tend not to make any big moves. If someone's on the precipice of doing a deal, whether it's a real estate deal or any other kind of deal, I think people's general natural tendency when we're at the edge of big events like an election cycle or like a interest rate drop, they tend to want to see what's going to happen next. And I think that pretty much holds true for the way I see the single family rental space, the land and lot space, the build for rent space. I don't think anyone's in a huge rush to jump into the water before they realize, what's going to happen with the election, what's going to happen with interest rates. So it's an interesting time. We're trying to get deals done, finding owners, finding buyers, and we've gotten a bunch done over the last 30, 45 days, and I'll tell you more about that. But my general sense is everyone's kind of slow playing it because there's these big things coming up that can work in your favor or work against you, depending on who you are and what business you're in. And it seems like, no one's ready to make any big jumps. So in terms of the real estate market, here's what I'm seeing. Anyone that talked to me over the last 18 months since interest rates had risen, you know that Strata's business used to be like 80% build for rent and SFR portfolios. And what ended up happening with us is we ended up taking a lot of build for rent projects, normally in the early stages of lot development and land development and trying to sell them as finished units. What ended up happening with those deals is a lot of the firms that we showed them to ended up showing them to builders. And the end result for the investors were the numbers didn't pencil out at the higher interest rates. It used to be you can pencil a build for rent deal in a high 5, low 6 cap rate range. That ended up raising to like a 7+ yield on cost number. And after they looked at it over the course of 1 month, 2 months, 3 months, and showing it to a builder and a developer to help them figure out the numbers didn't make sense as build for rent. So what ended up happening was we ended up showing those deals to the very builders and developers that our build for rent firms were working with. And we ended up making some lot sales happen directly from our developers who were anywhere between like a land developer, a strict land developer, or a real estate investment fund that was developing the land for build for rent. And we ended up selling those lots to builders as for sale products. And then we turned around and we're like, hey, this is a good business. It's a lot easier to sell a lot to a home builder as a retail play than it is to sell as a build for rent, at least in recent months, for a number of reasons, including you don't have to worry about rents, you don't have to worry about assumptions. Builders tend to know what their market is, and they tend to know how much they can pay for a lot. So our business exploded on the lot sales front over the last 12 months. Right now, we've got like 600 lots under contract between developers and builders, mostly for sale. And that jut in our business was kind of unexpected, very welcome, but interesting. And while this time was going on where we're feverishly selling lots, we've still been looking at SFR portfolio deals, and those were hard to get to pencil at higher cap rates. But it seems like right now there's lots of funds out there, lots of funds underwriting deals that are SFR portfolio deals. And finally, over the last couple months, we ended up getting a handful of SFR portfolio deals to actually go. And I attribute that to the fact that sellers' expectations have started to come down in line with the market, where they were expecting to get either market price or somewhere below 10% of market price. The deals that we've gotten done have all gotten done at a 6 to a 6.5% cap rate, and those discounts are anywhere between 10 and 18% of market value. the key numbers seem to be like 15%. If sellers are willing to take a 15% haircut for larger portfolios, buyers are willing to buy it at like a 6+ cap. And luckily enough for us, we ended up getting a handful of those deals done. So that's really what our business looks like right now. It's like land and lots from developers to builders and SFR portfolios. We haven't done a build for rent in the last 12 months. We did a bunch before that, but we can't seem to get the cost in line with the kind of yields and returns that build for rent investment funds want. So I expect that to change as interest rates come down. I expect more build for rent deals to pencil. And until then, we're going to continue to do what we do best. And I wanted to talk a little bit about that because, as much as I like to gloat and brag that we know more than anyone about the land and lot space and more than anyone about the SFR space, I think the real value that we've created here in Strata is the fact that we spent most of our time going out there and meeting buyers of all kinds, all shapes and sizes. And we built our buyer network to over 11,000 investors, from like very small investors to very large investors. About 400 of those are actually fund investors. But I found when this change happened, the sheer size and scope of our network, the Strata network, was really the thing that we leaned on, because when the funds stopped buying with both hands and we started having to knock on doors of like family offices and like smaller high net worth individuals to buy our products, I think where we succeeded and many others failed is the fact that we spent a lot of time making sure our buyer network was as big and as well qualified as any network out there. And I think over the next 6 months of our business, we're going to really focus there. We're going to focus on more highly qualifying buyers, getting deeper into understanding what buyers want, so that when we get a project, whether it's an SFR portfolio, a land or lot deal, or a build for rent deal, we've got more options at our disposal than mostly any other broker out there. And I think that's going to serve us well. So I'm optimistic about the next 6 months. We continue to do deals, but we struggle to do them. But I see it loosening up, and I think after the election cycle, after interest rates come down a little bit, it's gonna be a lot better than it is today. So just my 2 cents. Hopefully you found this interesting. We've got a bunch of deals below if you want to check them out. They're land lot deals, SFR portfolios. We've actually got one build for rent, stabilized build for rent in Cleveland. That's a really cool deal. So check them out below. Hopefully you enjoyed this. And as always, if you have any interest in talking to us, you know where we are. Thanks for listening.